I look at a lot of the factors that happen around the Florida area. I look at the local markets. And what's kind of happening now locally is, you walk into your regular big box store, there's not as many people in there as there typically was. Now, that might be because, hey, Tom, Easter's over and all the retirees are heading north. That might be true, right? But everybody's got to eat. And, you look at things like Walmart and you look at some of the Dollar Generals, Family Dollar stores. This is the area where you're going to find Ross, Marshalls. These are the areas where you're going to find people that are going to buy. They're buying commodities. They're not buying luxury brands here. And when you start to see those pull back, you start to think, all right, this could have something to do with tariffs. Take a look at the real estate industry. Real estate markets, especially here in pockets of Florida, have pulled back dramatically. I was seeing something in the Punta Gorda, Port Charlotte area where we're seeing number of listings. All right, we're seeing pullbacks and drops in number of listings that we haven't seen since 2009. And that's not just the the gurus on YouTube that wander around with it. You see them, you know who they are. They wander around the neighborhood and they're doing this. And you know what they got in their hand? They got a selfie stick. And so you see them, they're walking through neighborhoods and they're talking and they got the sunglasses on and they're moving along. I'm not talking about just those folks because now this is actually we're starting to see this on local news. So even local news has picked up on this. All right. So you look at that. You see real telltale signs of an economy that's starting to hold on in the back pocket. And then you come in and enter May. Sell in May and go away, or what I like to call it, buy in May and make some money today. That's what I want to talk about here for this particular session. So when we go in and we look at sell in May, let's talk about the pattern for a moment. So historians, and these are long-term technical analysts, long-term, I wouldn't even call them seasonal traders. They just pick up on what somebody else said and kind of spin it their own way without really understanding the patterns. They say, oh yeah, here comes sell in May and go away. The market's done really well since then. Some of them are saying, oh, sell in May and go away starting in April. So get on the bear train. Well, that might be true for, going back to the 1930s. That might be true going back to the 1950s or 70s or since 1987. But the last few decades have told us that selling in May was a bad idea. I know this. I agree with this. Sell in May has really become, really for the most part, buy in May. And we have seen these pullbacks that happen in April. And year after year after year, they've been just that, setbacks, short-term setbacks. So I want to look at some opportunities that are coming, and I want to share at least one of them with you here right now. So let's get right into it. How do I know what I do with these type of opportunities? Well, I'm a seasonal trader. I'm a rules-based trader, not a meme trader. I don't get high on the emotions of others. I look at the data. In fact, most of the screens that you see, if you were to wander through my office or through my house, if I've got financial news on, it's muted. I don't want to hear what somebody else is saying because it might cloud my judgment. So with the money calendar, what we do is we take a lot of data, folks, and we put it into this calendar. And the way it makes this calendar is it's got to have a 90% historical accuracy going back at least 10 years. And when I look at the overall calendar, green is bullish, red is bearish, and everything else in the middle is a mix. Well, when you look at the month of May, there's a lot of green on the screen, right? How many stocks do I use? I use the top 325 stocks and ETFs. So I'm a small fish in a big pond. I use a minimum of 10 years worth of data, but I have 20 on tap. In case we start to see bunching, then I'll go out and I'll limit my list even further. I want to see what stocks produce more money each year during the same pattern. And I end up with tons of data. And it looks like this. This is the data coming into this week, coming into May. And we see a lot of data on the screen. All of it's green. My top trades do not have any red on them. There's no bearishness in these trades. And I blurred out all of them except the one there in the middle, which is the one I want to talk about. Oracle. So, I believe, and if you look at history, and we've set this out. We've talked about these double-digit drawdowns, and if you get these double-digit drawdowns at 6 months later, 3 months, 6 months, 1 year later, on average, they historically have moved higher. We don't see the kind of double-digit drawdowns that we've seen so far. And maybe they're not over yet, but probabilities tell us that they are. When you look at what really suffered this year, it was tech. Oracle was one of those ones that suffered. Oracle has a pattern coming in right now. Multiple trades that show us this too. So it's not just happening at the end of this week, but even the beginning of next week. So we see a couple days prior, to the beginning of May, and a couple of days past the beginning of May. I'm going to give you the best day to get into this particular pattern, which is a bullish pattern. It's a 56-day pattern, 90% accuracy, averages 8.7%, 8.7% move on the stock during those 56 days. Here's the best day to get into Oracle. It's May 5th. Yeah, it's a few days from now. But take a look at that. May 5th to July 24th. I have a pattern right now in Oracle. It tells me that this is the best day to buy. And this is the best day to sell. Now, how do I know this? Because I got data that goes back over a decade that tells me that Oracle makes its move this time every year, right? In fact, the last 9 years, it's worked. In fact, the last time we had a loser, 10 years ago. The last 9 years have told us that this is the time to get into Oracle. And here's a little bit more on that pattern as well. 2015, that's the red candle you see there. But every other year was green. Look at the last 2 years. 24% move up. That was in 2023. 23% move up. That was in 2024. And so I give a lot of weighting to that. What have you done for me lately? Okay. And what have you done for me lately? Well, the last 9 years. You want to see the last 9 years? Here's what they look like. This is the last 9 years on the screen every single year from 2016, 2017, 18, 19, 20, 21, 22, 23, 24. What do they all have in common? They all went higher. Now, they all didn't go up like growing grass. In fact, some of the most volatile years were 2018. We saw pullback before the rise. All right. And again, in 2022, remember we had 2022, we were kind of starting to that bear pullback. Well, we dropped down before rising again. So it doesn't just grow every year like a CD, right? But last 9 years performance have been really, really well. And part of that 9 years, what pushes Oracle to the top of that 9-year pattern is something that I call the power meter. That's where we look at those last couple of years and we weigh those in and we give it a weighting. So we have a regression line that tells us that regression line better be moving higher and not lower. If it's moving lower, I want nothing to do with it. The pattern's coming out of favor. It's moving higher. I want to get into that pattern. It's coming into favor. So once again, Oracle is one of my top seasonal trades coming into the month of May. And Oracle really it's just a tip of the iceberg of dispelling that myth. Sell in May and go away. Sell in May and go away. I think we saved that for another day. I want to buy in May and make money today. And that's my plan, right? Instead of sell in May, I want to buy in May. The market always precedes the economy. If the economy looks bad, if you got the guys that are on Guru or they're on YouTube, those gurus that are walking around neighborhoods, they're walking the sidewalks, they're pounding the pavement, and they're talking. Well, they're talking about the now. The market does not trade on the now. The market trades 6 months ahead of now. The market always precedes the economy. And because of that one statement I just said, it's better to be a rules-based trader than to trade on emotion.